Hello, everyone. Welcome to the Real Estate Show on KCMX News Media 880 and on YouTube at realestateshowOregon.com. I'm Pete Belcastro. This lady here is Alice Lema. We're both real estate brokers with John L. Scott in Southern Oregon. And we love getting together with people once a week here, Alice, and talking about real estate issues facing Jackson, Josephine counties, buyers, sellers, renters, investors. The whole schmo is out there right now and active in all sectors.
And normally our summer is usually a little slow, and we are just going gangbusters. So it's really quite, and it has to do with the supply. We have a lot more supply this year. The buyers are actually able to get out there and buy things, and we've got some trends. Listening to our fearless leader.
Well, there was a. In the rental market, okay, we talked about that a few. The reason I bring this part of it up, I was just with some people and we were looking at rentals. You know, they wanted to rent their house or sell it. You know, one of those kinds of options. And the rental market is pretty active right now as well. So I wanted people to be aware of that, that viability again. Because the rental market's gone like this, you know.
Right, it's going up and down, but also the rents are starting to go down. We had, a lot of increase over the past few years.
Yeah.
And the rental market follows its own cycle, but it is tied to the purchase market. And the purchase market started going down last year. Then we had the state laws change. Yeah. And so a lot of landlords are selling their buildings. So now there's more supply. It's all supply and demand.
And if people say to me, well, gee, things have slowed down in real estate. And I say, they really have not slowed down. What's happened is that you just alluded to, we have more inventory that has been put on the market. It happens every June, July. We start up in June, July, August. You get more inventory. So what happens where it may feel slow to some people, but what's really going on is that because there's more inventory, as brokers, we're able to show buyers more inventory.
So when we actually have more transactions happen,
right? But
because there's more properties on the market, it feels slow, but it's not.
But it's not slow. In fact, I know at our office, they had another record month.
Well, and how many offers did you write today?
Well, this week, there's a lot of them. And actually, there's just so much going on. That's what I'm saying. There's just so much going on. Well, we had a real treat, Alice and I, and the agents at John L. Scott this week. Lennox Scott, who has been actually on our show.
Yeah, and he's amazing.
He's the CEO of John L. Scott Corporation up in Seattle. And he's also, as you know, a big on the board of the National Association of Realtors, and has been on their research committee.
Yeah.
Remember when Tina Grimes from RVAR, the Rogue Valley Association of Realtors executive, is involved with that same kind of thing.
Right.
So Lennox was here, right, and she spoke to us, and I thought had just some great information to share with people, especially about how important it is to sell, especially if you're selling, to get that right in the first 30 days. And we've talked about that before, but 30 days, that's just enormous, isn't it?
Well, and Lennox is really brilliant when it comes to data analyzation, and he came fully loaded with all these numbers and trends, and he put them in a format that we can actually give out to people that's easy to understand, and the trends are really quite shocking. So we're going to talk about quite a lot of those today.
And what do you think? I mean, he obviously goes around to all the different offices around the states, the Northwest, so he knows what's going on, in the different markets. And he looks at our market here, I think he said, and it's quite good.
Yeah, our market is really active, and he stressed so strongly for the talk that he gave us that the numbers are proving that your house has the best chance of selling in the first 30 days. And that's what us as agents have always felt. Even in a down market, you really should have your offer, your property in escrow and have your offers in that first 2, 3, 4 weeks. And he came and showed us the numbers, and it's over 50%.
Overall, yes.
And if you don't have it in escrow in your first 30 days, you languish, and then you have to start doing your price reductions, and your actual close rate goes down really fast. It was shocking.
So think about that. You're going to say you're going to list your house. So the question is, how can you sell it in 30 days? And that's the thing, right? I mean, 30 days sounds great.
And not leave money on the table, because it's not all about price.
Right. Okay. So how do you do that? How do we get our sellers ready to say to them, look, your chances of selling your house if you don't sell your house in the first 30 days, amount of money goes down, everything goes down.
And it goes down fast.
Okay.
It's really quite dramatic.
So what steps then what would you say to a client, if I'm your client, what would you say then? How do I make sure that I can sell it in 30 days? What do I have to do to get it ready to do that?
Exactly. And it has to be ready. We're not talking about getting ready for 30 days.
No.
It wants to be launched. We want launch. And you want it clean.
Yeah.
You want your trees trimmed back. You want your lawn mowed. It needs to be tidy. No personal effects. Take a lot of those pictures down because you don't want people standing around looking at the photos. You want them looking at the house. And it really needs to be very calm looking, almost like a hotel room. And that's hard for a lot of sellers to do because they love their home and they want to have their comfort possessions out, but it will really distract the buyers. So it needs to smell good.
Yeah.
It needs to be very zen, if you will, very uncluttered, and you want to have a nice presentation up front, and that does not have to cost a lot of money. You just get it clean, you get your lawn mowed, you get your trees trimmed back, and then you take a lot of your possession out, completely declutter, and have all the lights on. And it's really surprising how something so simple as having your lights on makes a difference, but it really does.
Well, I was just with clients all week, and I'm telling you, you're so right. You walk into a home that is you've got light in it, it's bright, it's clean, it smells good, and buyers like that, obviously. And then you go down to some other places for the same price, and you walk in, and the worst things are animal smells or just the smell. Probably certainly does that, and does it look drab? Is it dirty? Those kind of things, and buyers know those things, and they're not going to. If you're going to make the same offer, you're not going to make the same offer, are you?
Well, and actually, unfortunately,
we
have great properties that are a little bit dingy or dirty, and they're actually great properties, and people won't bid on them at all. And it just has to do with an emotional response, a psychological response, and we cannot underestimate the power of the psychology when you're selling your home. So it needs to be ready. It needs to do a really good set of photos. That inspection report is gold. Even if you don't do any repairs, the inspection report is gold. It'll make the buyers feel better about writing an offer on you instead of somebody down the street.
And one thing that I've learned certainly from being around Alice is that the pre-home inspection for so many buyers is for so many sellers, it's such an important thing, because the deferred maintenance and repair addendums, dealing with those can just kill a deal faster than anything out there. And how do we stop that?
Yeah, and as on the selling, because they do studies on these psychological moments in a transaction, and the most stressful moment for a seller is surprisingly waiting for the buyer's inspection to come. Yeah. And what's the most stressful for the buyer? Do you want to guess? Because the National Association of Realtors does studies on it.
Okay, what is it? I don't know.
It is when their offer is accepted. And so we, as agents, we need to be aware of that, but also as buyers and sellers, you need to be aware of that your buyer is going to panic as soon as the offer is accepted.
Well, in this, we keep saying you want to get, as a seller, you want to get ahead of the game. And if you have the home inspection already in your hand, and you've taken care of the things maybe that want it out there or whatever, you're ahead of the game. And it makes you can give it to the buyer, right?
Yes, and even if you don't do the repairs, it's okay, because you're being transparent with your buyer, and you're creating a better chance of having a transaction close because you did that ahead of time. And in Southern Oregon, it's not common. It's just not done. And so if you're selling your home and you offer a home inspection as part of the listing so that they can see what's going on, you're way ahead of the game. You're going to stand out from the crowd, and that will be helpful in getting your house sold in that first 30 days over somebody else.
The whole thing is about that first 30 days and getting the house ready,
and it goes by
launched,
fast.
Everything.
It goes by really fast.
It does, and yet when you kind of do those things and you look at the statistics, it shows that's the number one time, the best time at all to sell your property. And just to tell you, if you go back a couple of years and do this, Alice, and the luxury market is one area where the first 30 days doesn't matter. None of them sell generally in the first 30 days in the $1 million range. Isn't that interesting?
Well, but I am one of the people that says they should.
Okay.
So, because I think the mathematical formula is the same. Well, because they're frequently overpriced for the current market conditions, and market conditions are always swimming. They're always changing.
All right.
And we first noticed our downturn last summer. You and I were here, and we started talking about how there was a slowdown. And now I think the luxury homes in Jackson County, aren't we over 3 years, or about 3 years of inventory? That is a hugely buyer's market.
So if you just to tell you again, the statistics don't lie. Which is exactly what you're saying. $1 million homes plus, okay, in Jackson County on July the 1st. There were 30 of them on the market, okay, 30 of them. In June, there were, so they've added 5. Anyway, there was 1 pending sale during that time, and so they call that a selective market.
So that means the buyers are being selective.
30-month supply. It's almost a 3-year supply at that range. But if you go down to the other ends of that spectrum, Allison, this is where most of the activity takes place between 0, obviously, and what, 350,000, would you say, or 500,000? 350 or 5? What is your?
Well, I think it depends on the zip code, because those same numbers in Ashland and Jacksonville are completely different than where I live.
Yeah. Well, okay. Let's pick $250,000 to $350,000.
And that's the national average.
And that's a real popular range. Jackson County's median price home is $330,000.
Mm-hmm.
So we're in that range, okay? Again, there were like 203 listings on the MLS. 93 of those were pending. So 56% of those went sold in the first 30 days.
Which is more than half.
But they call that a surge, which means that's low supply. And that's what's happening there.
But that's almost normal. That's on its way to normal.
Yeah.
And that's the thing we have to remember is a normal neutral market is 180 days. That's 6 months. That means the buyers are not in charge. The sellers are not in charge. That 5 to 6 month waiting period.
Yeah.
But again, I still believe that if you work this, if you work your property correctly and get it launched in the first properly, you should have your house sold in the first 30 days.
And in the first 30 days, $0 to $250,000. After 30 days, 65% of them were pending. Okay, for instance, from June the 1st, $250,000 to $350,000. After 30 days, 56% were pending,
which is still really high.
$350,000 to $500,000. After 30 days, 32%.
It goes down
were
fast.
Pending. $500,000 to $750,000. After 30 days, 23% were pending, right? And it goes down there to the $1 million range, and there were no pending. So that tells you right there that first 30 days is the most important part of the selling process.
No matter what price range you're in. But also when you're looking at pricing your property, think about if you can be right under one of these price breaks, the major price breaks, and it's the same on the apps, $350,000, $500,000, $750,000, they go in chunks.
Yeah.
So be right under one of those major price breaks, and you'll be more likely to get sold sooner.
If you're at $775,000, you might want to get under $750,000, right?
Yep.
And if you're at $530,000, $525,000, you might want to get under $5,000.
Yeah.
Because your chances the chances just improve to sell.
Well, and pricing.
But start it right at 30 days, right? And get it right there and go.
Yeah, and don't mess around, because even though our market is not, in my opinion, actively declining right now, we're normalizing, we're flattening out, and the numbers are showing that. If you look at our year to date appreciation in Jackson County, it's only 2.6%.
Yeah.
So 2.6% is not very much. That's a pretty flat.
I like that.
But that's what normal's supposed to look like.
I'm okay with normal. It's okay. It's okay with normal.
Yeah.
We've got a break coming up here. Pete Belcastro, Alice Lema here with today on the Real Estate Show. We're coming right back. Don't forget, you can check out any of our past shows at realestateshoworegon.com. Some great shows there. Please check them out. And we are coming right back after this. Welcome back to the Real Estate Show on KCMX News Media 880 and on YouTube at realestateshoworegon.com. Pete Belcastro and Alice Lema here with you today. And thanks for joining us here on the radio and YouTube as we hit the end of July, now to August. We're in that the peak selling kind of starts, March, April, May, like those months, and now June, July, August, and then we go this way a little bit, right?
Yeah, and we still sell a lot of homes in the fall and in the winter, but it's nothing like it is now. This is your best time, and it's actually a nice confluence, if you will, because we have the maximum amount of inventory available, and then luckily we have our low interest rates, which nobody saw that coming. We all thought we'd be at 6 or 7% by now, and now we're below 4.
Yeah.
So it's like run, don't walk, and buy a house.
So interesting. We've been talking to you in the first segment about that importance of that first 30 days, and you get the most money, you get the most everything during that time, and you want to have your house ready to go. Just one more thing, and then I'll stop on this one. Okay, we'll go. So it's just so interesting. If you're in the range, say that $250,000 to $350,000 range, we were talking about that earlier. Again, this is for Jackson County. You can take any month along the way, but to show you again. 0 to 30 days, the average probably in this thing is about 45 to 50%, 45 to 55% each month, okay? That first 30 days. The 30 to 60 days, it goes down anywhere as near, it's around 15% maybe an average.
Yeah.
The third week, it's like probably an average of about maybe 6 or 7%. The fourth week, it's 3%. The fifth week, it's 2%. And so at the end of the 190 days, there's still almost 20% of the inventory has not been sold.
So this is the important thing to remember. If you're going to be selling your house, then you need to get it done in your first 30 days, because after that, the second 30 days, you have maybe a 13% chance of selling, where you had an over 50% chance of selling. And the idea of, well, let's start high, we can always come down, that only works a little bit, because the buyers actually know this strategy now. And many buyers will start only looking at houses that have been on the market more than 30 or 60 days.
Okay. You know, I've also seen a lot of happening around in auctions, and you know, the foreclosure market is not large, as you know. It is very tiny, a tiny percentage of the market. Compared to what it was.
But that's supposed to be normal. Like 10 to 16% foreclosure rate is supposed to be normal.
Gee,
and we don't.
That's normal.
Yeah,
we're way below.
under 20% is a normal foreclosure rate.
We are way below that. You know that? We're way below that.
We are.
We're only like about less than
Well,
less than 5%.
when the prices go up as much as they have, then people are not underwater. And you know, in Jackson County, our 5-year, I think we're looking at houses now, median price is $292.5, and back in 2014, we were looking at a average of $208. So that's almost $100,000 of appreciation in just a handful of years. So a lot of people are not underwater anymore. But I'll tell you, I've had 2 appointments this week for short sale possibilities.
You're
with
kidding.
80 and 90-year-old people. Reverse mortgages. And reverse mortgages are wonderful in a lot of situations, but at some point, sometimes they are not so wonderful.
Yeah. And we've had experience with that. You've had more, but you've had experience with this now, huh?
Yeah.
That's what's going on with
sometimes reverse mortgages come back to bite you.
They do.
And then if you have to sell it, you don't have your equity sometimes, and then you have to do a short sale or it goes to foreclosure.
That'd be the only reason almost a short sale could come up, isn't it, anymore? It's like
yes,
that.
Exactly.
Wow, how far that's come. When you remember not that long ago, short sales and foreclosures were the majority of sales.
They were over 50%, almost 60% of our sales.
Certainly that. In 2012, we had that statistics, remember? That's amazing. So how far that has come. Well, getting your house ready to sell is, of course, as we've talked about the first part of our show, is such an important thing. If I'm buying now, let's talk about the buyers here, because there's a lot of people. 60% of the sales in Jackson and Josephine County are people who live here who are either moving up or down the scale, right?
Yep, 60%. And 60% of them are going to walk into your house and have an opportunity to buy it right then.
Right now, yeah.
Right now.
Yeah. Okay, so what do we tell buyers in this frenzy? We're telling sellers you got to be ready in 30 days, you got to do this, you got to blah, blah, blah. How should buyers approach now when they come in to these places?
Well, buyers still have their list. They, by the time they're on tour, buyers already know what neighborhood they want to be in. They're pre-qualified. They know what they want. They know what they need, and they're just looking for the right fit. So the average buyer right now will go out and look at somewhere between 12 and 20 homes. And they'll start writing offers right away within the first 2 weeks. So your home needs to be ready, because they're going to walk in, they're going to open the door, they're going to look around, they're going to smell, they're going to feel, and they're going to start trying to find reasons to either buy it or not buy it. And it's really very simple. It's black and white. Yes, no, yes, no.
Yeah.
Do the bedrooms have enough room for my furniture? Is the kitchen open to the living room? Or in some cases, people don't want it open to the living room because they don't want it show their dishes. But anyway, they have their list, and they're going in, they're making their decision instantaneously. And things like pet hair, pet odors, food odors, dust, too many piles of paper on the counters start to distract them, and then they just get agitated and they want to go to another house.
How should sellers approach? How do you approach the buyers when they're looking at prices? I mean, you're right about one thing. Buyers will come into your house, and any buyer is going to do this.
They're going to pick it apart.
I'm going to look for the bad things. I'm going to look for the bad things. Isn't that weird how people do that?
Yeah, they're trying to exclude. Yeah, they're really trying to exclude.
I don't like that.
Houses.
I'm trying to put that kind of thing. But that's what happens. So how do we come around? How do we get over that?
Well, one of the strategies for buyers is to look a little bit higher than your price point, and that is because so many sellers are still overpriced, or they're priced in an odd section of the app. So they're like 253.9 or something, and that just they get lost. So go ahead and look at those because they're not showing up as often. Look at 2 bedrooms. Some of the houses have enough square footage. You could still make that work, but they're not going to be showing up on the apps as often because most of the apps are set for 3 bedroom. So I think that's a great strategy. So for buyers, you want to try to find and bid on things that other people are not finding and bidding on that still meet your needs. And
what about pricing? I mean when you come in and the prices say it's $300,000 and you look around. People, you're right. They're smart buyers. They've looked online. They've seen what Zillow says. They've seen what so and so see what the county says.
The county records are online.
What the market value is, what the assessed value is. Although those kind of things are out there. So pricing is all. I'm talking about the buyer now. Do I give them full price? Do I give them less?
It depends on how many choices you have. So if you have very unusual circumstances, and that can be I can only live in one street, or I absolutely have to have 6 bedrooms, or I absolutely have to have no yard. When you start to have absolutes like that, you have a smaller selection, and then you need to have a real viable plan B and C. Because you're going to have to either come in really, really strong, or you're not going to get what you want. If you can be more flexible, then you're going to have more chances to make a deal and negotiate more, because it kind of matters less if you get that particular address. But I'm telling you, we had a multiple offer situation on a home in East Medford, and we just don't get that. And it was $350,000. We just don't get those very often anymore. If they're going to happen, they're more in the 200 range. But it does happen, but it was completely clean. It had tons of granite. It had very little carpet. It had all this stuff, and they got over full price because that was the time to really get in there and be strong. So when you're a buyer, you need 2 numbers in your head. You need to know what your absolute comfort zone is, and then you need to know what your lower preferred comfort zone is. And depending on how important it is for you to get that address, that's how you know how much to offer.
Isn't it like how much you really, 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 really want it too, right?
It is,
how
exactly.
Much you love, how much you fall in love with it, and say, oh my, you just get that feeling, right? The awe.
The awe, yes.
And some people say, I'll pay the full price for it.
Or more. I'll pay a little bit more. But that's why the buyers need to really talk to their lenders in more detail, because a lot of buyers don't have 2 payments in their head. They just have one payment. They just have one price in their head. And you really need to have either the little bit higher or the little bit lower so that you know where your wiggle room is.
We got a break coming up here, but how do you deal with how should the buyers and the sellers, this is a good one here, how do generally deal with closing costs? Because closing costs can kill a deal. I mean, I've seen it. I'm not paying them, not doing it, gone.
And don't you find that sellers don't really understand that people don't have that much money saved up? They have their down payment, but it costs almost 3% for the buyer side closing only. So 3% of a $300,000 house, that's $9,000 more dollars. And a lot of times they have the down payment, but they don't have that. And if you're a buyer, then you're just not going to be able to compete on the really, really beautiful, priced right homes because you don't have that. So what I tell my buyers is to have, the game show joke, have a lifeline. Have somebody out there who can get you $5,000 if you need it. Have somebody out there, or 2 people, who can get you those extra closing costs so that you can get the house you want.
Because you can't accept those kinds of gifts for things, right?
In some loan programs you can. Yeah.
And that's important.
It is, but it needs to be set up ahead of time, too.
The closing costs can really, and sellers and buyers can haggle over that. You can negotiate over that, right?
Well, and then there's appraisals, and sometimes the appraiser will say, well, it's worth $315,000, but you've got $7,000 of closing, and I just can't justify that extra $7,000. And then the buyer's sitting there saying, well, the house is only worth $315,000. I'm not going to pay what I offered. And the seller's saying, well, that's your fault because those are your closing costs. And really, the point is the house is not worth what we agreed to in the beginning. And the sellers are not super understanding about that situation in the beginning. And most people just don't have $7,000 more dollars.
So the flashpoints, the areas that can, When you're going north and all of a sudden you're going south, the flashpoints then are really closing costs, repairs, addendums.
Yeah, it's the appraisal. It's the
yeah.
appraisal, the closing costs, and the repairs. Those are where you can crash and burn.
Those are the three areas that you just are hold the whole thing together, right? And you can pull it apart or hold it together.
Yeah.
They can bring it together or pull it apart. I guess that you can
and
do
you
that.
just have to be ready. So having people in your family circle that have a little bit of extra money that might help in a pinch is good that's good preparation. But also if you're a seller and the appraisal comes in low and it happens to be just the same amount as the closing costs, well, you still don't have a deal.
You don't have
it doesn't matter whose money it was or whose idea it was. You still don't have a deal.
And when you have an appraisal, again, buyers and sellers got to deal with this. The appraisal comes in, on schedule. That's great. But if it doesn't, you can negotiate that, right? Or what do you do at that point?
Well, it just depends on the person's financial situation. Every once in a while we have people with a lot of cash in the bank, and so, they can make that work. But most of us can't. We have what we have. And it's just human nature to buy the most house that we can absolutely, scrape every penny together and buy.
Yeah. Well, I even saw this week a 3.8% loan.
Yeah, they're out there.
One of my clients had, and I said, "It's better than mine."
What kind of a difference does that make in the payment?
A huge difference from 4.6 to 3.8. That's hundreds of dollars. So, all these things are out there. So, again, we've always encouraged our buyers and sellers to be prepared, right? Mm-hmm. The buying end of it, just as you talked about, the selling end of it, be prepared. Take a lot of the stress out of it, and it'll be much more rewarding experience if you know what you're doing going into it.
Right, and the way it is the way it is. Whether you're a buyer or seller, the market is what the market is. And so the buyers know that they're going to have their best choice of homes in the first 30 days, but they're going to pay more. So they know that. So for them, it's if they wait 30 or 60 days, they're going to get lesser of a house, but they're going to pay less because of just the situation that the seller's in.
All right, we got a break coming up here, so you got to come back. Hold that thought. We got a break coming. Check out any of our past shows at realestateshoworegon.com. We're on KCMX News Media 880 on YouTube at realestateshoworegon.com. We're coming right back. Final segment here, Pete and Alice, right after this. Real Estate Show continues on KCMX News Media 880 and on YouTube at realestateshoworegon.com. Pete Belcastro and Alice Lema with you today here on end of July. We've been having an interesting discussion about buying and selling here. It's summer, the summer season. The peak of the season is right now. Right now. And we're going to go into the fall season and things change a lot. And speaking of change, the whole real estate world has been changing. Like every industry out there.
Disrupting. The disruptors are out.
Yeah, everything. Just thinking about how much it's changed just in the few years that we've been doing it. Okay, so it's going to be different for both buyers and sellers in the future, isn't it?
It is, and there's a lot of things happening. One of which, when we have a flattening market, then we're going to go into a lower, slower paced appreciation. So we had this complete accelerated bounce back from the crash, and that's over. We are in a normal market now. We're healed. We're moving forward. We're probably going to have 3 to 6% appreciation a year, and so the big hits that we were seeing from appreciation in the last 5 to 10 years, in my opinion, are kind of gone, and we're just going into a slow roll here.
What was the average 5 years ago in Jackson County? What was the median price, or what was?
So in 2014, the average price was $208,000.
208.
Mm-hmm. In 2019 so far, it's $292.
Yeah.
So that's a 40% increase, and I'm just saying, don't expect that anymore. I think that's gone, and now we're just going to kind of chug along in a normal market.
Is then, in your opinion, because you also invest, you got a lot of investor clients and stuff, is real estate still a good investment?
Absolutely. It is a great investment, especially in Southern Oregon. If you're from other places, it's a very affordable place to invest compared to some of the big cities. And if you're a local, then you're just going to keep going up. It's just not going to go up as fast. And people need to realize that.
I think it was 68% of Americans in a NAR poll said that yes, real estate is a good investment, that they would invest in that. So That's good. That or the stock market or 1% maybe in a bank. But you're right. Real estate appreciates. It's a tangible asset that you have. And that's why holding on to that asset or having that asset that you own is really important. And again, it's how you generate wealth for yourself. It's not renting. Let's get that out of the way. You can go pay, as you said, $1,800 or $2,200 a month in rent. That's not generating wealth for you.
And that's exactly the key. Is
your house,
wealth building.
Your house
overall
is.
wealth building for your life is
Right.
better served if you own real estate.
Okay.
So, and then some of the industry changes that we're starting to notice are that some of the big players like Open Door, Redfin, what's the other one? Zillow's buying houses now. And it's very interesting because it's not exactly what it seems. So Zillow's going out there, and there's other companies too, and they're advertising that we'll buy your house for cash. But what people don't realize is they're actually charging as much as 7%.
I was going to say 10%.
Or 10%. Right. And so that's not a deal.
No.
And they're not actually buying very many. I think they're buying maybe
less than point. I think it was less than 2 or 3%.
Right. So out of 200 that they look at, they might get 10 or 2. Somewhere in there. And so the interesting thing is, well, what are they doing with the rest of the houses? You know what? They're using it as a listing model.
Right.
They're taking these people and they're selling the data, because it's all about big data now.
Yeah.
They're selling the data to real estate agents, and they're charging the real estate agents 30% with the idea, and it's Zillow business model. You can look at it online. They're hoping to go to 50%.
Yeah.
So I'm here to say, okay, that's fine. This is America. You can have any business model you
Absolutely.
want. However, as a consumer, are you better served by somebody who's not going to charge you 7 to 10%? And then if you have somebody at the other end who's only getting paid 70% or 50%, are your needs really being met? It's going to be so we're not really sure that it's going to fly. And in some of the financial observers that are watching Zillow just as a corporation, they really are not super excited. They're not sure that this is going to work. And it's not just Zillow. So it's called the iBuyer. And I'm not just saying this because I'm a real estate agent. I'm just out there looking as an interested party in real estate at how it's morphing. And the idea of selling your house for cash to an investor has always been there. We've always had some amount of our market be sold that way. But if you're getting these TV commercials or you're seeing things online, just do a lot of research and find out exactly how much money it's going to cost you, because you might do better with an agent. Agents, on the most part, get you more than what you would if you sold it yourself.
Yeah, there's lots of. I mean, competition is okay.
Competition is great,
as long as it, fair competition and all that, and it's still going to take out. And when if they're going to buy your house, you got to tell it to them. This is the price they're going to pay. This is what you do, and you go. It's going to be less. And then what are they going to do with it? They're going to try to sell this. They're going to try and sell them and things like that. They don't even care. But the point is that you got to have some human somewhere in the interaction, because it just doesn't work on.
Well, it's
online,
such an emotional.
It's too emotional.
Yes, buying and selling real estate is emotional, and it's because it's driven by life events. So I was just meeting with somebody today, and they're having to go into assisted living, and they're so sad and they're so upset, and that really affects and I just don't think somebody in an online situation is going to really care about any of that.
No, there's no empathy there. If you're just another person, another kind of thing. You're very right about that, and it's the interactions and the friendships that you make out of it that I find are the most rewarding part, especially when you can help somebody reach what they want in their life, and it is fun with that. It's so interesting. So we'll see what happens with all this. I mean, there's artificial intelligence. There's all sorts of strange marketing things coming along the way. But in the end, it comes down to people taking somebody to look at a house.
And helping them, and helping them tell if it's a good house or not.
Yeah, and that's what we're about there. Now, next week on the show, we want to give you some heads up here. James Stout, who is a local attorney, will join us next week.
Landlord-tenant law.
Landlords and tenants. So, and he's in the middle of stuff. I mean, he's experienced the new landlord-tenant laws firsthand already, and he'll be with us next week. So I hope you'll join us for that, because that's another thing that has come up this year.
Well, and it's really changing our market. It's
Yes.
changing it a lot. It's changing the prices. It's changing how we do business. And if you're a buyer, it's very hard to buy a house now if there's a tenant still in it. And if you're selling and you have a tenant in it, then boy, you better be careful because it's tricky.
And you have to remember, if you have a tenant in a house and there's nothing changes, it's a 90-day escrow.
And you have to give them a copy of the offer.
Yes, you have to give them a copy of the.
We're all highly uncomfortable with that.
That's what business is it of the tenant to know that? I know anyway, but that's what they did.
And you have to give them money probably.
Yeah, and you can negotiate your way out of it. But the whole thing is just put a whole boiling pot going here in rentals. And James will be here next week to talk to us about it. 2 weeks from today, Lance Landers, and we're going to talk about estate sales.
Those are great.
You talked about, you just said you had an older lady who had to moved into an assisted living place.
And I recommended Lance, actually. They're going to call.
And you have a house full of things. These are the things that we talk about as we age that we want to prepare ourselves for, because it would just make it easier and try to. I think I'm into the latest thing now. If we do anything, nothing else, I'm trying to reduce the stress of people, because it is just not that it's bad stress, but it's just stressful.
Well, and being prepared takes a lot of that out. And if you have information and you have good counsel from your real estate professionals, then it's just going to go more smoothly.
We get all sorts of information, all sorts of stats and stuff, and it still comes down to individual sales.
Yeah.
It's a people business.
It's a
people market.
business.
But it's sure activity, sure a lot of fun right now, because a lot of buyers are out there. Sellers are certainly out there, a lot of inventory, and we're at the peak of the market right now of 2019, just July, August.
And we haven't had that. We've had so many summers where we just didn't have enough houses to sell.
Compared to last year, this is great. This is a fun summer. And they're buying everything. And it's people moving here, it's people moving up and down our own scale. And that's what...
and a lot of apartment buildings are starting to come on the market. We haven't seen that and that's
really?
in some cases in reaction to the new laws, but you can get some great deals if you want to be an investor.
That's going to do it for the real estate show today. A big thank you to Brett Nance, who ran our video camera today for our YouTube show. Thank you so much for being with us. We're back with you next Saturday here on KCMX. Check out our shows at realestateshowOregon.com. Hey, for Alice Lema, I'm Pete Belcastro. Enjoy the rest of the week, and God bless you all.